All right, good evening traders. Welcome to my trading channel, YAT, your everyday trader. That's what it stands for. Quick abbreviation or short abbreviation. YAT is just nice and simple, really. So yes, today I'm just going to make my first video, market breakdown of some of the currency pairs well, actually one currency pair that I'm currently looking at in 2020, January 2020. I think it's the 7th of January. So yeah, so I'm just going to share my ongoing experience in the trading market. So some videos will be breakdowns, and yeah, it'll be varied. It'll be different content. But yeah, today will be the first market breakdown video. So yeah, so what we have here, so I'm straight on TradingView, so that's the platform I use for all of my analysis. So yeah, so to describe what's going on here, so this is the EURGBP on the monthly time frame. So I'm just going to quickly break down this pair, and then let me know what you think after by either subscribing or yeah, just leaving a comment, and obviously hopefully you can give me a like button as well. So yeah, let me get to it, and let's not waste any more time rambling on. Okay, let's get cracking into it then. So as you can see, obviously price, this is obviously currently where we're trading at, because this is the January 2020. So we'll go back to previously. I'll go back into this in a sec, but as you can see here from this level, you can see prices made lower lows and lower highs, pushed price down to the 0.70 region before price pushed up, and now we're trading within this this range. As you can see here, it's been like this since yeah, October 2016. So now it's 2020. So about 4 years we've technically been in the range, where obviously this level here, for example, this resistance level here has held 1-2 on 1-2 occasion, and obviously from the bottom region here, this level here of that's on the candle actually, the low is 0.8333, has held as well. So 1, 2, 3, and obviously this is the fourth attempt now to break that level. So I'll go into it and let's just map up a few levels to just give you more of an indication of what I'm talking about, so just to avoid any confusion. So this level, and whoops, there you go. So yeah, so we're trading within this level, as I said, this range, accumulation, sideways market, you name it. There's so many different words for it. So yeah, so as you can see, price last attempt to break this to the upside fast to confirm more buying pressure. Failed to do so, and got rejected from this level when price pushed further down. And as you can see now, price has hit this level, this key level, where obviously 1, 2 on 2 of different occasions where price sensitivity has touched there, and obviously retraced, and push price up to the opposite direction. So yeah, let me go zoom into weekly to just give more of an indication as to where we're at. And obviously you can see now the EMA on this level here has respected, this level has been respected by the EMA, and price pushed further up before we made that down move. Let's go down to the weekly. So as you can see from from looking at that picture there, you can see the order flow is bearish. Sorry, 1 second. Sorry. So yeah, as I was saying, yeah, bearish order flow from market sentiment point of view, and you can see prices currently trading below the 50 EMA. So that gives us another confirmation that price is bearish. And so yeah, so let's go down into the daily, because as we can see this, we can't really see any sort of lower lows and lower highs. We can see from this picture, but it's not as clear. So I'm going to go down to the daily 4 hourly so we can have a better view, a clearer view of this. Oops. Okay, so we're on the yes, as you can see on the daily now, a bit more of a clearer picture. So we see more of the swing lows and the swing highs. So we can do this is swing low point, swing high. This is the next swing low point, and this is the swing high. But let's just explain a little bit about this candle. You see price pushed up about 200 to 300 pips, but it failed to close above this high. So you can see this is a massive fake out. You can see that EMA is actually EMA 50 has been respected significantly here as well, and has avoided this candle, or how can I say, rejected this candle from closing above that high. So yeah, these are the kind of moments that, you know, I would say, yeah, watch out for them, but it's very hard to anticipate when they will come. Sometimes they just come, and as you can see, but that's why you would use obviously certain technical indicators such as well as supply and demand and support and resistance to pinpoint where there's strong levels of resistance or strong levels of supply. So you can see, so obviously before you enter the next trade, you would obviously ideally like a price to close above that level to give you more of a confirmation that price will still drive in that direction. So yeah, so as you can see on the daily, let me just map out some supply and demand levels here. So that's one of the techniques that I use. I'll just, let me just remove the background. Just gonna have a nice little border to give you a bit of an indication. So you can see price has respected this level on 2 occasions. Price dipped into here on this level here on November 26th. Price dipped into it here on the 2nd of December and then rejected. And then here again, so the price dipped in on the 23rd of December, 24th. And then, oops, I think I pressed the, sorry about that. So yeah, on this on the 25th, so price, you can see price put, so this was a bank holiday. We know this is Christmas Day, so they obviously, due to the lack of liquidity, that's one of the reasons why price failed to sustain that kind of level, and a lot of robots would have also pushed the price up, just to basically trigger stops, trigger impending orders to the upside, and obviously just taking them all down. So basically, yeah, just taking it 2 ways. That's probably the easiest way to explain that. And ever since then, you can see price 3, 4, so 1, 2, 3 candles of indecisive candles before price made it push to the downside. So this obviously a strong bearish body gave us an indication that price will most likely carry on in this formation before we could potentially see a move upwards. So basically, one of the key indicators for me, or one of the key points that I took out from basically just looking at these 3 bullish candles, is that from obviously this body that I explained, this bearish, obviously strong selling activity here. 1 to 3 days of buying activity failed to close above this market price of this previous bearish candle. So that gave me the indication that, you know, you can see this push to 1 day, 1 to 3 days, still not above the market, sorry, above the open price for the 31st of December, so the New Year's Eve, right? And that's the reason why we see now this candle. So basically, this is basically a tweezer top formation on the daily. Yeah, so basically I marked this level. So yeah, just mark this level just to give us a clear indication. So you can see this is obviously the last high on this candle, obviously this bearish candle that's basically closed on the same fashion as the opening price of this bullish candle. So price, instead of actually pushing slightly below, which obviously we qualified as a tweezer top, it slightly went above. So this can be from numerous reasons. Obviously, the textbook is that if price either rallies to the same sort of high or slightly below, that gives us an indication that there's obviously a buying weakness, and obviously sellers are coming in, and that's more favored at that during that time frame. But in this instance, what happened is that price obviously, what I was trying to say is that there would have been a lot of pending orders, buying pending orders at this high, obviously trading from this level, from this candle here. So what would happen? Price would have pushed it up, and obviously given us the belief that price will obviously take out this high on this candle and obviously close above. That will give us a further confirmation that price will be pushing up. But unfortunately, in this instance, it didn't. So instead, what it did, triggered pending orders to the upside and obviously pushed price down. People would have placed their stops around the opening price or the low of the candle. So from what price is trading currently right now, that's probably going to be taken out by today if price is if the bias is short, which I believe it is, based on obviously this candle now basically engulfing this candle that happened on Friday. So yeah, so that's some of the factors. So obviously we have this pushing price up, but failing to have a close above this supply area, and obviously which is in conflict with the 50 EMA, and then obviously this bearish body, and then these three candles failing to sustain a close above this bearish selling area. So that's the reason why we're seeing this. So we can, for me, based on these things that I mentioned, I believe price is going to be driven further down. I'm actually currently in a trade for this pair, so I will map out as well another thing that I will use to give me further confirmation. Basically what gave me further confirmation to take this trade I'm currently in. So I'll use this, even though it's a fake out. I'll use that level because obviously this is still the swing high, and this is obviously the most recent swing low. And oops, what am I doing? So you can see I've entered the fib. The reason why I've actually why I don't actually apply all of them, because I just want it to be as clear as possible. To just use the levels that I really basically will be trading under. So you can see here, for example, so from the swing high to the swing low, let's even remove the 0.50 because that doesn't really apply at this moment of time. Move that there, give it a little zoom in. So you can see from this swing point, price retraced, managed to reject at that 0.382 area. And I would like to map out this as well. We have another bit of supply here. So believe it or not, this is actually this is actually a bullish candle. So you can see here the opening price was 0.8539 and the closing price was 0.85396. So basically like 6 micro pips. But bullish candle is a bullish candle, eh? But obviously it's quite indecisive. That's why price do you have a massive selling off here. Yeah, but let me just go stick to the point actually, and enough of the rambling on. So I'll just use a different board and not to just cloud. So yeah, so this is obviously the supply area, and yeah, so we managed to actually find a trade within this supply zone, and obviously the 0.38 the 0.382 Fibonacci level, and due to these confluences we thought there was enough sort of and obviously what I explained here from price obviously failing to sustain a failing to sustain a close above this level, and obviously pushing price further down. So due to these factors, and obviously with the Fibonacci and the supply I just mentioned, so we entered a short trade. But we did this on the lower time frame. But yeah, let me just go down to the 4 hourly so we can just see the picture a little bit more clearer. So you can see here, as I said, massive selling off, and obviously this is obviously the correction, a bit of a correction, as we like to call it, accumulation phase, where price obviously make the retracement before it makes a big down move. So at the moment you can see price failed to push above this supply zone on the 4 hourly, as you can see from this daily supply, and obviously now it's trading below the supply zone, as well as it's broken now the 50 EMA as well. So that gives us more confirmation that price will be traveling probably most likely further down. It might take a little bit of time, maybe a few days before obviously it hits this low, because that is one of our potential targets, but we might take some profit just like around this region here at 0.850. So yeah, so we're currently a couple of pips up in profit from this trade. So yeah, we just have to sit on our hands, be patient, and just hopefully this trade will play out in our favor. So yeah, I think that's the end of that market breakdown. Yeah, 15 minutes. I don't know if that's quick. I try to be as quick as I could anyway. For this breakdown, and let me know what you think. If you have any questions, comment below, and I'll get back to you. If not, you can go on my trading page on Instagram. Actually, I have one there, Your Everyday Trader. The same logo that's advertised here on YouTube. So hopefully you enjoyed that. And yeah, more to come. 2020. Let's go, traders. Let's smash it. Yeah. But yeah, thank you for listening, and I will see you guys soon.